Good morning, everyone. It is Wednesday, July 28th, and this is Nadex Morning Analysis, where we look at potential hotspots in the Nadex markets for today. My name is Todd Rich. I'm with Nadex. With me, Brian Caprice from Keep Trading Simple. Brian and I are going to take a look at a few potential hotspots, but before we do that, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone, that any trading decisions you make are solely your responsibility at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. So, what are our hot spots in the markets today that we're looking at? And, well, we've got a couple of events. First off, we are going to have uh, oil inventory reports this morning, 10:30 a.m. Eastern. We're going to get that oil inventory report. Then at 2 p.m. today, the FOMC is going to talk about interest rates in the U.S. Now, are we expecting any changes? No. More importantly, is the phrasing that they use, and then the 2:30 p.m. Eastern, the press conference, where everyone's going to be listening to what they have to say and the statement they make. So, with that, with the oil inventory report, with FOMC today, which is what people are really going to be talking about, what's coming out of the Fed? Are they going to recognize that we've got inflation? What are timetables for addressing that? Today, what we're going to go through first, we're going to take a look at oil because that will be potentially impacted, not to mention the fact they've got the oil inventory report this morning. We're going to take a look at gold. And it's interesting enough, we've seen both gold and oil in these range-bound markets. Well, today could be a day where they break out of that range. And then we'll take a look at equity indices. We'll take a peek over at the S&P 500 and see what could potentially happen in the equity markets. So with that, I am going to flip it over to Brian, and let's talk about oil, gold, and then I think we'll finish up with the S&P.
Yeah, sure. So, yeah, I wouldn't say there's a lot of movement. We mentioned it yesterday that we kind of expected kind of almost kind of like a stagnant pond, right? Everybody's looking for
Yeah.
FOMC to figure out what they're going to say. We've seen, CPI last night in Australia was higher than expected. CPI this morning in Canada, kind of mixed, right? The median was higher, one was dead on, one was a little bit lower, and the overall CPI was just down slightly, but obviously still a positive number. So again, kind of given that kind of mix there, right? And again, we know Canada's a little bit behind as far as recovery and kind of the vaccination rollout. The pound is basically the only thing really giving us much signs of much life right now. Pound dollar is up. Euro pound, where it's in the second position, is down 45, which is bigger than what we've seen recently. So again, that's definitely that return of strength there, and then as well as the pound yen at 76. So again, the pound is the only thing basically giving us, across the board more or less strength. The dollar is kind of in its secondary position, I would say, as being strong this morning. And again, a lot of it, I think, is going to be based around what FOMC is, going to be, releasing today. We haven't seen too many different headlines about it. Again, there was some last week talking about are they going to have to, change their stance, talk about inflation being a little bit more, maybe starting to mention what taper looks like. All those things tend to be dollar positive. And again, that's what we're kind of seeing the market prepared for ahead of time. Now, if they do their typical kind of wet noodle, it's going away, we're not doing anything, I expect it'll be major dollar weakness today after that release. But right now, there's not really a ton out there. Now, one other bit of news, you can see it down here at 10:30, we do have crude oil. So crude actually this week is, again, I'm stretching the chart out to make it look really, really exciting. But this is the reality of what, compared to last week, right? This is what we dealt with last week. This is what we're dealing with right now, right? So right where we are right now is basically where the European session opened. Every week we talk about the API report, and again, it's an industry-specific report. All that means is it doesn't necessarily have to be as credible as what the EIA number is. But what you can see right now is the forecast was coming in at minus 3.4 million, which is actually higher than what a lot of the forecasts are right now. The forecast is expected to be 2.6 over here on Forex Factory. So, it was higher, but then it came in as a minus 4.7. Now, remember, this kind of gives us a little bit of an idea, but it's not, it's nothing official, right? The response in the overnight was really not much, right? That information came out approximately right here, and price went up a little bit in the overnight. It kind of went down, gave us a little pop, kind of came back down again, and now we're kind of right back where we started. So it's one of those things that we've seen this week where, really going back, I mean, it's, the last couple days, this was more or less an inside day, right? This one, the blue is bigger than the orange. This one, it's close, but we opened and we finished, and the range was actually quite small from open to open to close. Today we have another small one as well. So we still have that area up there at 72.72. We have a buying area down here at 17.15. We've been waiting for it to come down. It just has been unable to do it. Where we are right now, I'd say the best way to look at this is going to be on a shorter duration contract. As we mentioned, this is how we trade all news. We drop it down into those 5-minute the 5-minute time charts, and kind of see where has price been pushed after the open. Remember, we're seeing some movement now. The oil traders are obviously in the market, but at 9:30, when the retail trader steps in, they're going to look at this and say, "Oh, we have oil today. What's the forecast?" Okay, the smarter ones will look at, "Okay, well, this is -4. This is over here. That means oil's going up today." And what they'll do is typically move it towards a specific area. We do know we have a knockout sitting up there at 73. So if the retail trader drives this price up into that 72, 71 level, don't forget, this could come in as a bigger negative, right? Say it comes in as a -4, which the API report does, and this thing still could head straight down from that level. Again, a lot of it is how do you position yourself beforehand? So again, you got to start looking at that between 10 and 10:15 in the morning. It is a 10:30 a.m. release, particularly after the open today.
Yep.
And I think that thought.
Yep, I do. Actually, there's something else I just wanted to point out. I mean, here's the oil chart. Clearly, we are range bound. I'm zoomed in on it. But something that people haven't noticed, we've added some really cool tools to help you with some of this. If you were going to look at binary options, for instance, and clearly we're a little bit range bound in here. I think this actually should be a little bit up. I'm extending out what we had earlier in the week, again, levels where we were seeing, buyer step in, seller step in, and we can see it's been stuck in this range for a bit. If you think it's going to be breaking out of this range, I mean, there are ways to play that with binary options. And if you're looking for it to break out of there, let's just say you thought it was going to break down below. I'm going to choose the binary option way below now for the moment. But if you notice on our order ticket, I mean, here you would sell something down here if you thought it was really going to drop. On our order ticket, if you haven't noticed yet, we've added some new functionality. It's the probability that your particular trade would be in the money, that it'll be a profitable trade. And then what your max ROI on that would be if you actually traded that. So for instance, if I were to sell, and again, not a trade recommendation, if I wanted to do a strangle strategy, for instance, and I sold this one down below, I sell it at 90. I know what my max loss and max profit are. I can actually see what my return on investment would be because I'd be risking 975 to potentially make 90.25. And then the probability of that even being in the money at the moment is only 5% because this is actually a little too early. This is the 10 a.m. one. We would want to be looking at the next 2-hour one that would print, but it'll, the numbers would be there. If you wanted to, and if you thought it were breaking out to the upside, again, you would, you clicked on buy for one up above, and this is a strangle strategy where you think it's going to go way higher or way lower. Again, not a trade recommendation, but on the order ticket, if I were to buy one up above, it would tell me that, hey, my probability of success is only 15%. But if it were successful, I would be making a 485% return on my, $16, $17 investment, looking to make 83. So we've added some really cool functionality to help you understand not just the dollar amount that you could potentially make or potentially lose, but as well as the probability of that particular trade finishing in the money as determined by the marketplace. If you're buying, it's the midpoint between the bid-ask spread for binaries. If you're selling, it's 100 minus the midpoint. And then your ROI is simply how much are you risking, how much could you potentially make. But we do the math for you so you can sort of gauge your trades and then really get a better understanding of what you're actually doing when you're trading binary options. So again, I just went through a strangle strategy, a breakout strategy, but it sort of makes sense when you're only a 16% probability if I buy it, if I think it's going to break out above, and only a 5% for it to break down. I'm trading the wings, looking for a big move, looking for a surprise. So just a little lesson in the binary options there and some of that very new functionality that we've just added to the platform. Brian, I'm going to flip it back over to you so we can keep going with after oil. We can talk about gold a bit, again, with FOMC coming out.
Yeah, so this Basically, this second yellow circle right here, if you guys can see it, this is where we were sitting yesterday. And we talked about how we kind of had these two areas. We like kind of a clean entry if we could get it up here at 1807. We ended up getting up to 1807.82 is what we had. It made it to 1807.34. So we missed it by just a little bit there. And it came back, right back down again. So obviously, this has been the kind of the sideways channel that we've been following. We mentioned that we had decent levels at 1823, 1782 was now kind of the two extremes. We had a sell that we were interested in getting into at 1807, but right now we're literally chopping back and forth. And again, this is extremely hard to do any analysis on. The reason why is we're looking for kind of not certainty, but very clean. When I say clean, I mean not more wicks than bodies. This is kind of all over the place, right? So
Wait,
what we
what do
can
you
do is
call it, Harry?
yeah, it's hairy.
Love that.
At this point, I think we kind of need to look at this and say, listen, and again, let me point this out again. So the European traders stepped in here. And I mentioned this yesterday in the longer session, if you guys were able to catch it. What we've seen is European session drive down, right? We've seen Europeans drive it down. We saw Europeans again drive it down. And again, European session drive it down. Now, yesterday it was kind of mixed. They kind of drove it up. And again, it's important to understand that they drove it from here up, and then there was the reversal. So right now, what we're seeing is kind of that same thing. If they send it down, it reverses up in the U.S. session and then flatlines. They send it down again, it reverses back up again, and then flatlines in the overnight session. Here, European session drove it down, and this one really just based, and then that's where we did nothing really for forever. And then again, straight up and then reverse back down again by 12. And then again, what we've seen now is a push down into a level of buyers. And again, we know it's an FOMC day. So the question is, if we follow this kind of pattern that we've seen here, bouncing between the top and bottom of the channel, we should probably come back up to this level over here around about 11 o'clock-ish, 11, maybe 12-ish time frame. I'm curious to see if we are able to kind of rally back again and we put ourselves at the 1708 range. If that lines us up for FOMC today, is that going to be a major short? Because again, we've seen most of the retracement happen from open till lunch. FOMC, they're absolutely going to have to mention inflation. But if they say something along the...
Would that make it yeah, if all of a sudden they said, yeah, we were wrong. We're seeing inflation and we're going to have to act sooner because there's definitely inflation and we're going to acknowledge it. Maybe that's
they
not
could. They could, but many people in politics don't typically admit that they were wrong ever. I think if they start talking about how they're starting to see inflation subside, like they said, and it could be just in some random sector, that's what sends this. That's down.
Yeah, like that would be, and that's probably more realistic, isn't it?
Yeah, I mean, especially because if you think about where we are right now, I mean, one of the other headlines out there, I mean, you look at it right now, COVID-19 in Europe. Here we go again. The CDC saying that now they're making recommendations that in areas where they're having increased risk, that indoors they want to put masks back on again. These are things that the Fed is going to look at and say, hey, it's coming back. We really can't make any changes. So all this inflation that is currently there, if we start shutting stuff down, it's most likely going to disappear like it did last time. So for them, it's kind of like, why would they jeopardize sending the stock market into a crash to raise it? Because here's the thing, they're obviously not going to raise it until 2023. Maybe late 2022. That's what we know. They started talking about tapering, but if you start tapering right now and it causes like a stock market crash, and then all of a sudden we start closing down again, they don't want that blood on their hands.
No.
So
they would look really...
I think if anything, and again, going into an election year, there's a lot of things that are out there that are going to be asked, and a lot of questions that are going to be there. So I feel at this point, people are going to be much more on the side of let's pass the buck down the road. Let's keep the inflation here. Again, now they're trying to figure out how do we take inflation out long term out of the energies and things like that. But the policies will have to change. Me personally, on a fundamental level, I do feel that gold needs to go higher. I do feel that inflation is there. Everybody's seeing it. Gas prices, food prices, meat. Go look at meat. I love me some meat. And you look at prices of just ribs; they're like 1.5 times what they used to be a year or 2 years ago. So again, inflation is out there.
They're just not in any hurry to do anything about it.
No, they're not, and that's why gold's where it is. So, as much as I would love to say they need to acknowledge it, the CDC guidelines does not necessarily help it. They may just say, "Hey, listen, Yeah, we got more, there is more inflation here, right? There's definitely more inflation than we're seeing. We expect it to be transitory by now, but it'll be September. But we have major concerns about the economy closing back down again, and that's all they
Yep.
need to say. As soon as they say the C word, that's it. It doesn't matter if there's inflation now or not, or if it's going to be transitory or not. People, that fear that'll be there will help drive this back down.
Well, yeah, probably. No, that does make a lot of sense. All right, let's go ahead and wrap it up then today. Let's jump over to just the equity markets themselves.
Yeah,
And
I would say they're very similar. The NQ is a little bit of an outlier, but the ES and the YM chart look very, very similar.
let's do the ES.
Yeah, they're kind of falling into this equilibrium position. I mean, 4,400 seems to be the equilibrium position. It's the dotted line on here. Yesterday, we mentioned we had that great area of basing right around the 4,410. If we could clear through the top before FOMC, that could be a reason to kind of launch us forward on that one. But all we saw yesterday was price really pull away. We never got a clean entry. We did get a break of the 43.68, but never got really like a clean entry for that Harry Potter move. And it used that level, which is great. I love the fact that it did that, because that just shows me next time the same buyers that were stabilizing us here are no longer there. They're gone. And the fact that we have 2 wicks here with the exact same bottom, love it. I'm all over that one. It's definitely something I'll keep on my radar. I may actually even look to get in short a little bit higher on that one. But right now, again, 4,400 is the outlier. If they speak, if they say that, COVID's, earnings look great. I mean, we're getting wonderful earnings from companies right now. We're at all-time highs. They can say that we're going to taper, or if they say that we're going to do nothing, it's like, hey, I mean, earnings look good. Boeing posted a profit for the first time in like 2 years based off 737 deliveries I saw this morning. So, I mean, even the airline companies that are, obviously not running at, kind of full capacity, they have great earnings. So, I feel like, if there's any type of dovish statement today, the indices could have a nice little pop forward. I mean, maybe the gloom and doom sets in first because the media talks about COVID this morning, but I mean, in reality, we keep pulling back. 4,400 seems like the norm now, right?
Right.
When we are poised this high, again, can we go higher? Sure. I mean, talking about how, we're not changing anything. We're seeing inflationary pressure disappear, and consumer confidence was great, which means people are spending money. These are all great,
All good
ingredients for
indicators.
a recipe for up, right? And then again, the next top side position that we're looking for is that 4,450. YM is the same exact thing. I mean, we're just, we're a little bit below that 35,000, but now that we've broken it, it's like peeling the Band-Aid off once already, right? We've already hit it one time. You just put it back on. It's not as strong. It's not going to be as hard to get through the next time. So, it's there.
All right.
And NQ is kind of rallying the same way. It's the Charger. So, NQ could be the big mover today. We're right above 15,000, which again, the equilibrium is crazy. We talk about psychological numbers: 4,400, 15,000, and 35,000.
Yeah.
If you don't believe
me, meanwhile,
all,
I mean, it climbed all the way out of the hole yesterday.
Yeah, it's up 0.42% versus 0.1 and 0.03. So I mean, it's trying to catch up to its two siblings. And again, it's some positive news. That one pops.
Yeah. All right. Well, with that, any questions for Nadex, please email us, customerservice@nadex.com, whether it's about your account, our products, the platform. We can't help if you don't let us know. We are very accessible. Brian is also accessible. If you got questions for him, please feel free to reach out to Brian at support@keeptradingsimple.com. A quick recap of what we went through today. Again, this morning, 10:30 a.m. Eastern, we've got oil inventory report. It is a supply-demand driven product. Now, this is the industry report, but we'll get a glimpse into what's going on with the supply of oil, and we'll get a little bit more of a taste on demand. We know demand has been going up, but we're waiting to hear what the FOMC, how they position things when they release their decision at 2 p.m. Eastern today. And then, of course, there's going to be the press conference afterwards where there's a lot of questions fired at them, and everyone's waiting to hear how they frame and how they couch their answers. And so you could potentially see some late day volatility, whether it's in oil, gold, or even in the equities markets. Brian, you got anything else you want to add for today?
That's about it. Like I said, FOMC, I think after this initial push in the open, I think it's really going to slow down. And again, make sure you get in there at 12:30, 1 o'clock. Really start looking for your positions. If you are in a position and you are profitable, don't forget you can always take things off early to avoid the additional risk. There's nothing worse than trying to go for that last $10 on a binary contract to have it whip all the way against you and be a loser because you got greedy. You risked $90 to make 10. Just remember your risk to rewards on all your positions today.
That is an excellent point. because there could be some surprise volatility, and we don't necessarily know how the market's going to react. So great advice in terms of how you want to think about risk reward going into the FOMC announcement. With that, we will catch you again tomorrow morning. We want to wish everyone good luck.